All right, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, markets able to bounce back again this week. So Friday, nice little short squeeze, up 2.38% on the spiders, and that was despite some pretty horrible tech earnings, really outside of Apple, Microsoft, Google, Amazon getting hit pretty hard this week, although they did rebound a little bit on Friday. See Google there, Amazon gapping down. It did come off the lows, but pretty ugly gap down there. Meta earlier this week, just complete bloodbath in the metaverse there. But in the metaverse, it's still a $300 stock, so that's fine. Anyways, stocks able to rebound here, and right now, despite the weak tech earnings, despite the poor economic data we got this week, some kind of weak housing numbers too. Right now, negatives are a little bit of a positive for the market, right? FOMC next week, it's increasingly likely that the Fed is going to use pause verbiage. I fully expect that. I don't think they're going to say that they're going to pause specifically, but they'll definitely leave the door open for it, and the market will probably like that. You got to remember, we haven't even really felt the full effects of the first 75 basis point hike, and I think the Fed is realizing that now. So there's likelihood that we're going to see a pause here. However, that does not mean that they're going to drop rates. We still have sticky inflation, and we still have a 2-year Treasury note yield that's at 4.5%. The Fed funds rate is about 200 basis points shy of that. So that is still a problem. However, it's short-term relief for the market. This is a bear market rally. We'll give the market the upside bias here. Probably going into the election, honestly. I believe the powers that be want a strong market to show to the rest of the world. There's a lot of geopolitical stuff going on right now. And typically the midterm election cycle, this is kind of what you get going into that election period. So we'll reevaluate it here. But for right now, we'll give the market the upside bias. As far as targets, you take a look at that inverse head and shoulders. I believe we talked about it last week. I certainly did talk about it on my channel. You just take the target here, copy that line, and it takes you right up to the bigger head and shoulders, right? So big head and shoulders, and then here's your inverse. And the price target, strangely enough, lines up right to that neckline. And it's just above that 400 handle. So that could be a target there for the market to get to at or around the election. I definitely wouldn't rule that out. I can definitely see that happening. And your kind of next upside target would be this downsloping trend line, which kind of ends up converging with this one at some point, and that 200 moving average. So that would probably take, a move up and then a higher low and then like a zigzag up. I don't know if the market can get that high, but that would be kind of your max target there on the spiders. Either way, near term, we could continue to give the market the upside bias for now, but this is still just a bear market rally. Again, as I said, that 2-year Treasury note yield is a problem moving forward. For the triple Qs here, same kind of deal. So 290, you got that pivot low right there. That's a good resistance area. And then, of course, that downsloping trend line. If you get through that, again, your second target would be probably that 300 whole round number. There is a gap down with a power red bar right there as well. So that would be pretty good resistance on the upside. And tech has been pretty weak here. Apple is doing a lot of the heavy lifting right now, and it's really kind of propping the market up. And you got to respect Apple at the current time. It's really just been a powerhouse, and they've been using this to keep the market up. So you got to respect that for the time being. I think this can get up to about 160, 161 in the near term. I think there's a lot of resistance up there, but for now, Apple's doing its job and being a near $3 trillion company that can be used to keep the market up when they need it. Anyways, let's get over to the semiconductors here. So SMH closing the week above 190, so a little bit of a sign of strength there, at least in the short term. You got a weekly close above the June lows, so that is a nice bid for the SMH. Intel reported on Friday and got a nice little pop up there to that 29 handle, closing above 29. So nice move there for Intel. With the semis, though, this is still not a pattern of strength, nor is it really a sign of strength. And for anyone out there who's questioning if this is a bear market rally or if it's an actual bottom, let me ask you a question. How many times have you seen a major stock market bottom where the semiconductors were laggards? This is the sector that always V-shapes off the lows. You're not seeing a ton of strength here. Yes, we closed above that 190 handle, but just compare that to the spiders here. I mean, look at what the spiders have done off the lows. You want to see the semis outperforming the market, and that has not been the case here so far, and that is why this is still a bear market rally. But SMH near term, above that 190 handle, kind of flagging a little bit here. So next levels are 195. That is a bit minor here. The bigger levels, that gap fill right at that whole round number around 200 there, and then of course the 50-day moving average. So those are short-term levels there for the semis. IGV here, basically trying to flag here again a little bit of weakness, and also cloud software not showing leadership either. Not a good sign. You want to see tech leading. So again, still bear market rally, but IGV holding up, looking like it's trying to flag here on the daily. I don't think it gets much through 280, 282 at this point, but we'll respect it for now. This isn't a terrible pattern, and you know, if the market trades up, this will trade up with it. Dow Transports, so closing above this trend line here that we've been watching, and you got above this red bar high on a weekly close, also the 20 moving average. So nice little pop there for the transports. You're still coming into this big red bar, and I think there's a lot of daily chart resistance around 14,000. So that is going to be an area that it will struggle with. But for right now, strong close here on the week. And again, we'll continue to respect the transports as well. Interest rates here via the 10-year. Again, pulled back this week, but still holding trend. Again, nothing wrong with this. No technical damage. Just really an inside week. It's overbought. It's extended, yes, but this has also been repressed for 40 years. So that is kind of what you come to expect here. Interest rates holding up okay. Big support here on the 10 years, right around that 3.85 area if we were to get down there. 30-year also strong, above all four major moving averages, holding up really well. And again, to reiterate, that 2-year Treasury tried to get a rally on Thursday and just got whacked right back down, so couldn't sustain above that 20-day moving average. This continues to be weak, and this will be a problem for the market moving forward. All right, flipping over to homebuilders really quick. XHB, again, pushing up here this week. Still kind of stuck in this range, and again, that's still, you could still make a case this is a weekly bear base here from the down move and sideways action. The longer that consolidates, the more pressure that will have to the downside. Same thing with ITB. Did get a nice pop on Friday though, but again, still kind of just stuck in this range here. The VNQ finally getting an oversold rally. This thing was just beaten down to all hell here. I think this can probably get up to that gap fill around 85.50. If you get through that, maybe 87 or so, but this thing really oversold. Not in good shape, though. You don't want to see the VNQ leading to the downside. That is bad for real estate, which is bad for the economy. And pretty soon, bad news will be bad news. Again, like I said with the Fed, right now, bad news is good news, but the Fed won't be able to get us out of it with sticky inflation coming up soon. Anyways, flipping over to XLF here. So financials, nice breakout here on the daily chart. Financials just continue to show strength here. The inverted yield curve will be a problem for them moving forward. And, you know, 2s and 10s have been inverted for probably about 4 or 5 months now. And we just had the 3-month 10-year also invert this week. And that is something that not a lot of media heads have talked about at all. And I remember I was pretty much screaming at the top of my lungs on Twitter all week that why aren't people covering this? But this is considered one of the best recession indicators, even more so than the 210, and that is inverted. And there you have it. There's the 210s as well. And again, you can see that has been inverted for some time, going back to middle of June here. So this will be a problem for financials moving forward. It's going to be a problem for the market moving forward. It'll be a problem for the Fed. But for right now, you got to respect XLF. It's showing strength, and we'll respect it for the time being. XBD, broker-dealers, same thing. This continues to be a strong sector here, back above 460 on a weekly close. Nice move there for the broker dealers. Speaking of strong sectors, crude here, again holding up. Really kind of neutral on this right now. I do think there's a chance they whack this thing again before the election, but I also think that's right around where it's going to want to bottom. So basically, I'm bullish crude on any pullback or any sort of bullish pattern here. Any bull flag, anything of that nature. We still held that 100 moving average. A few weeks ago, we got a nice pop off of that. A little bit of a rejection candle, but now we're just kind of sitting inside. We have an inside bar on the weekly. If they do push this down, I think it'll be a dip buying opportunity for crude futures. XLE here, Exxon, Chevron reporting Friday. Just what a powerhouse move here off of the lows. And you figure this was at $68 and closed at 89 in 1 month. So pretty amazing move. Take a look at the OIH. That's a 50% move there, folks. 198 to 300 in 1 month. Big moves here. These are really overbought. I just want to point that out. XOP into this little double top here. They are really overbought, but they are very strong. And, you know, even just to visualize that, and just look at, this is, you know, your sector performance here in the S&P. Energy up over 50% on the year. Everything else down. Most things down, you know, 15-20% or more. So energy, the strongest sector in the market. And it's really, you got to wonder where the market would be without XLE right now. You know, taking a look at the CPI day a couple weeks ago, XLE gapped down, but it went green pretty quickly. And it wasn't even really down that much versus, you know, the spiders, which gapped down all the way to 350. I mean, XLE has been really the horse that's been carrying the market outside of Apple really all year long. Again, very overbought here in the short term. This does need a pullback. I think that OIH specifically will probably want to retest that 260 level. XLE probably 8250, somewhere in there. XOP, we'll call it like 135, 140. Maybe even that gap fill down there. But again, very overbought here short term, but really kind of holding the market up right now and, you know, doing their part to keep this market propped up since tech is not doing its job. Anyways, flipping over to nat gas here. So nat gas continuing to bid off of the lows. There was a little bit of contango in the futures contracts rollover on Thursday. So we gapped up, came back in, filled that gap, and got a nice little back test of 550. By the way, we made money twice this week in carnivore trades on Boyle, basically picking the low on Friday and averaging in a week before and making some really nice gains on that. I think nat gas is bottomed here. Don't worry about the inventory talk. They're oversupplied in Texas. Trust me, Europe will blow through that before you can even blink an eye. But either way, the charts are telling you this is a good buy. Anyway, take a look at the trend line there. Oversold going into it. Trend line from here. Nice convergence, 100-week moving average. This was your breakout area. I mean, there is so many factors for support here in nat gas. I like the level, and I am bullish nat gas going into the end of the year here. Flipping over to, let's quickly cover, it's CCJ. I believe last week I told you 25, maybe 26, the gap fill, and we got up there. So we filled that gap on CCJ, closed back above the trend line on a weekly basis again. And, you know, not a terrible candle. You do have an inside bar here, a weekly close above 2702. Would negate that, but you know what? CCJ is holding up, and again, energy. This is a form of energy, you know, right? And it's holding up much better than, you know, big tech, for instance. So CCJ doing a nice job on the year, and nothing terrible there. Good reversal, but you know, it had a nice bounce back on Friday. So I still like the chart. It's still strong. The trend is still up. Anyways, just quickly touch on ag. So DBC, we're just kind of in a choppy range here. I'm not even really concerned with this trend line anymore. This is really just a big monthly consolidation pattern, if you ask me. So you had a big overbought parabolic move, and now you're just trying to digest that. And you can really see the same thing on the potash names. Take a look at Mosaic here. This is a strong monthly trend. So you were in a downtrend for really the better part, more than a decade, actually. That is now reversed. You went parabolic, and now you're just digesting. So these stocks here, you know, Intrepid as well, didn't quite get above that breakdown area, but still reverse trend. Nutrien, NTR, same kind of thing here, big parabolic move, and now it's just digesting. So I do like these going into next year, but if you're looking to hold these, this may be something that could take a little bit of time here. They're digesting a big parabolic move, and that does take time, but the trend is now up on these names. Flipping over to the dollar, so DXY here, a little bit of a pullback this week, but still weekly close above that 109.50 level. I've been talking about that for weeks now. That 109.50 would be an area of support, and we got a nice bid off that Thursday and Friday. Dollar index still holding that 50-day moving average, and really more importantly, the 20-week moving average and this green bar low. So dollar index still strong, still holding up here. I don't see any problems other than the fact that it is way overbought on the bigger time frames. Metals here, so gold, a little bit on the weaker side here this week. And again, I still think we've got one more dump in gold and we'll get a very good buying opportunity. But, you know, it's hanging in there for right now. I don't really see anything too significant on the chart. Trend is down. You had a nice bid off a double bottom, but no real follow through here. The bullish thing right now, though, is GDX does have higher lows. So we're continuing to see the miners lead the metal, which tells me that we're close to a bottom. So again, I've been telling you guys that, and I do expect that to happen in the not too distant future. Silver holding up much better. You still have a daily inside bar there, and I do like silver here. Again, higher lows as opposed to gold that is making lower lows or at best double bottoms. So silver in much better shape. Platinum, I love platinum. Again, kicking myself for not getting in on this. I had an order open last week before the breakout. Take a look here, beautiful wedge pattern, and it pushed through, just didn't get a fill on it. This should get up to 1,000 here before pulling back, but I love platinum in this area. Copper, nice breakout of this little channel here. The only problem with copper now is you kind of have a weekly kind of bear consolidation here. And I think you could get one more push down in copper. It will ultimately result in a pretty significant buying opportunity. And you can see some of these companies like Freeport Mac having the same kind of chart here as the COPEX. Same exact kind of pattern there. That kind of move down and then sloppy consolidation. But I think there will be a good buying opportunity in copper as well as gold. Anyways, Bitcoin here. Just want to briefly touch on that. That did get a little bit of a bid this week. Nice little pop here. It hasn't done anything for about a month, but got it outside of that range. Near-term targets looking for 22.5, so that would be this red bar high here. And for right now, it's setting up okay for a move up, so we'll give it the upside bias for now. Anyways, flipping back over to the spiders here, just to reiterate, I am giving the market a little bit more of a neutral to upside bias here. Going into the election, especially in the FOMC, I do expect the Fed to use a little bit more dovish pause-style verbiage. That does not mean that there is a bottom and does not mean they're going to cut rates. Again, the 2-year Treasury is telling us that. In addition, we're going to get to a point here very soon where the bad news, meaning the bad economic data, the bad earnings, is going to be bad news again, not good news, if that makes sense. The Fed's not going to be able to cut rates with sticky inflation, and I think all eyes will definitely be on that CPI report coming out, I believe, on November 9th or 10th, which is right after the election, not coincidentally. Anyways, guys, gonna wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com, and I will talk to you guys all next week.